Nischal Maheshwari is Head of Research, Wholesale Capital Markets at Edelweiss Financial Services. He joins in right now to take some questions. Nischal, good morning. Great to have you with us here. Prashant this side. The view that you've held, the negative view is played out nicely. What's your sense? Yesterday seemed extremely painful, especially painful. If you just looked at banks, it just looked like, there was an expectation of a outright rate hike or something. By the time the market shut, the way they were selling off. Where do you stand on things now?
I think, Prashant, what market is worried about is what's going to be the next step of RBI as far as the rupee is concerned. Now, rupee hit a new low yesterday at 61.80, and that's what set the panic among the people, saying that the next possible step is increase in. So RBI has got several steps now which can decide what to do. One is a CRR hike, other one is a repo hike. The third one could be increasing in the NRI deposit rates, and the fourth could be a sovereign bond issue basically. I think what the market, since the RBI has taken that first step of tightening the liquidity and sort of increasing the short-term end of the rates, the market panic, saying that now RBI possibly could come with either a CRR hike or a repo rate hike, and that's going to be really negative for the banks, and I think that's how the market reacted. Secondly, I think the outlook on growth just becomes a bit lower. We have seen most of the houses now downgrading the numbers from 6% to around 5.5% and lower. And so outlook, since it becomes bleaker, FIs are becoming sellers on the banking counters. So I think these are two things which I see basically creating a bit of a problem for the banks.
Right, and that's a fair point. But does so you're saying that the fear which is dominating the minds of market participants is what is the next step from the RBI? And how will it impact growth? So we've got a new governor of the RBI. Right. So between now and when Dr. Rajan takes over, one can assume there wouldn't be a big policy shift, which is announced by increasing rates by the outgoing governor, right? They'll wait for the new governor to take charge. Do those expectations get calibrated? Would the fear that there will be outright rate hikes go down? Or Dr. Rajan nevertheless would have to do that because there are only so many monetary tools available?
I would have preferred basically a sovereign bond issuance at this point of time, given that sovereign bonds are always tools in the times of emergency. So I think I would have preferred, and that would give one stability to the rupee, and the second not impacted the growth. So let's see how Dr. Mr. Raghu Rajan, how does the new governor actually takes the call on that.
Yeah, but would I know you prefer a sovereign bond issue, but the fear was that there would be outright rate hikes, right? Does that expectation go down?
There is a fear, yeah. I don't see at the moment that expectation going down because RBI is on that path. But the last statements which the RBI governor made were pretty dovish, and they said that they will look at reversing this CRR, the liquidity crunch and all, as soon as the rupee stabilizes. So I see that if there is a sovereign bond which has been doing the rumors of the market, if that happens, I think you don't need to go ahead and do the full hog of increasing any CRR or the interest rate hike.
Okay, got that. I just want your sense on banks in a bit more detailed fashion. So what are they pricing in now? Are they pricing in that some of these liquidity tightening measures will last for 6 months, for a year, and the consequent impact on loan growth, asset quality, profitability? Is all that in the price, or are they pricing in something far worse?
No, I think today HDFC Bank has gone ahead and increased its base rate. So I think that is quite clear that People are expecting that this is not going to be a short-term policy. It is going to be prolonged beyond the 3-month horizon at least. Now, in that kind of a background, now if you look at the banks, then I think one thing which is going to be impacted is going to be growth, definitely. So we cannot see the same kind of growth which most of these private sector banks have been doing it. So most of them will definitely slow down as far as growth is concerned. Second concern comes is basically whether they will be able to maintain their margins or not. So in this kind of scenario where you do not have a strong demand, possibly some part of the rate hike you have to absorb internally, so there will be pressure on NIMs. The third thing comes is the asset quality. I think definitely if you are going to have this kind of a liquidity squeeze as well as interest rate hike, you will impact the asset quality across the country. So I think all the three things are going to impact the banks, and that is what I think market is now start figuring out and giving them a revised multiple.
Is this one of those times when there are, I mean, very few places to hide? I mean, if you can use that terminology, Nischal.
It's been the same thing for the last 2 years in India actually. There's been very few places to hide. People who have actually taken a call saying that rate cyclicals are the thing, basically I think have lost a lot of money on the market. So it's the defensives basically, and fortunately for us, IT has now emerged as a space to hide, given that the outlook on US has improved and most of the companies in the last quarterly results have put out a very strong performance and the strong guidance. So I think one more place has got added, place to hide. But private sector banks simultaneously has been taken away from a place to hide. So I think you are net at the same position.
Net at the same position. I just want to put out some data, Nischal, and I want your reaction to that. So you said there are, for the last 2 years, it's been a similar sort of situation. Broadly, I agree with this, but take a look at this data, which basically looks at the Nifty constituents, the index stocks, and what has happened to them from April 15th. I mean, actually 12th of April's close, right? And it just shows, I mean, if you were in a bunch of stocks, very small bunch of stocks, you could have continued to do extremely well. I mean, almost as if this were not a bear market, but a bull market. So that's Lupin for you. Since April 15th, last time Nifty was around these levels, Lupin is up 34%. Infosys is up 30%. Hero MotoCorp is up 27%. Lever is up 27%. TCS is up 24%. Sun Pharma is up about 23% or so. Of course, if you were in, another category of stocks like JP Associates, DLF, JSPL, as the data on your screen shows, from the 15th of April, you're down between 40 and 60%. Same is true with BHEL, Tata Steel, etc. Nischal, so, the point is, one group of stocks is still trading as if this is, this were a roaring bull market.
But that always happens, Prashant. We go back into 97, 98. That was a similar kind of a situation where we had a sudden hike in the interest rate because of the pressure on the rupee at that point of time. We had 200 basis point hike in the repo rate and a CRR hike simultaneously. Rupee still depreciated from there, but the markets reacted in the same way. At that point of time, you had the defensives, the same kind of polarization happening. If you remember 2000, it was same kind of polarization. It was only IT which was running. So these kind of polarization happens basically because that's a comfort, that's a visibility where the market has about the earnings. And that's where people actually go out and hide in that. Multiples, surprisingly, I was just looking back, 97, 98, the multiples for the FMCG sector went up to as high as 55 and all. We are still some way off from there. So I think this kind of polarization has been seen historically. I think it will keep on happening again and again because these are stocks which have got a very low capex requirement and very high ROEs, and the business is much more stable with very visible earnings growth. So I think people want to hide into these stocks.
Can you continue to hide in these stocks? I guess that's the crucial question now.
Yeah, I think so. I definitely think so till the end of these, till we come to election. I think till the election outcome, I think definitely.
Or is it better not to hide there and, I mean, get out of those names, because, I mean, you got to pay heed to price to earnings multiples and things like that.
Prashant, if you have a view, if you have an option basically to cash out, yes, you can. You can just take your money away and maybe just put into an FD, because right now your short-term interest rates, the FMPs for 3 months and 6 months are giving me around 10 and 11%. So definitely I prefer there. But if you have to be invested into equities, then I think this is the option till the elections.
Is fixed income a great, is providing very attractive opportunities right now, Nischal, according to you?
In the short term, I think yes. Yes, I think short term it is providing. The FMPs are for 2 months, 3 months is giving me 10% plus kind of thing. So I think that's a good instrument for next 2-3 months.
Good instrument for the next 2 or 3 months or so. So let's just talk about some detail as far as places, just to go back to places to hide sort of stocks are concerned. We can sort of call them that. Is there anything there where you see absolute outperformance as well? Not just because you're buying, hoping that they will continue to do well because there is little else to do in the market and people who can't cash out completely will continue to pile in. But are there any names there which you think will, on their own merit, do well in an absolute basis?
I think IT sector will definitely, on an absolute basis, give you positive performance. So from now onwards also, though IT has come up a bit, but I believe that upgrade in earnings will keep on happening for 14 as well as 15. And definitely most of these stocks will definitely outperform the market, but on an absolute basis also will still give you positive numbers.
That's about it, right?
Yes, absolute, yes, that's about it. As far as absolute is concerned, mostly others will outplay on a relative basis.
Right. A few months back, a couple of months back actually, PSU, not banks but state-owned enterprises and state-owned stocks essentially were being touted as the stocks that one should be paying attention to. In the recent fall, they've been completely crushed. What do you think is going on there, and is there any opportunity there?
I think PSU stocks, utilities is what I like, because there is once again a good hiding place, something like an NTPC or a power grid, where you have got a very clear ROE profile and the multiples are not very demanding. So I think some of the utilities you can look at, the PSU utilities, but I think beyond that I wouldn't prefer a bank or anything, PSU bank and all. I think there's too many challenges out there.
Nischal, thanks very much for your time. Great to have you with us here. Run us through what you would do right now. IT, the one space where he sees outperformance on an absolute level. Otherwise, it's pretty bad out there. It's been that way for a while. Let's just take a very quick break here. We continue to focus on the market. Nifty is down 0.7% or so, 55.35. Bank Nifty is down about Bank Nifty is up 0.5%. Beg your pardon, 98.10, and it's being led higher by Punjab National Bank, Bank of Baroda, Canara Bank, SBI. SBI is up about 1.8% as well. Private sector banks are weaker compared to what PSU banks are doing. Take that break. We're back in 2.